Good morning, everybody. This is the live market open for Tuesday, April 19th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for a fixed rate. Good morning to Fabian. Good morning to Jay. Good morning to everybody else here in the room. I see quite a few of you. All right. So as usual, we'll talk about recent developments in markets. We're seeing a one-sided trade at the moment against the US dollar. We'll talk about various charts and levels, of course. The next 24 hours, things are getting a bit busier than yesterday. Well, in terms of indicators, in terms of movements, they were busy also yesterday. And of course, we'll answer your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Well, there's one clear move. It's risk on, but this risk on has been now accompanied by a plain old US dollar sell-off. Okay, so what happens with oil? So yesterday we had oil prices, of course, tumble down. Begin with a negative. Let's begin with oil. We see this weekend gap. The members in Doha, the OPEC and non-OPEC members were unable to agree on any kind of deal. As details emerge, we now learn that it was the Crown Prince, mostly Mohammed bin Salman, who opposed making any kind of deal without without the Iranians. All right, but never mind the details. OPEC and non-OPEC members didn't even reach any kind of agreement, so oil prices tumbled down. But then what happened is, well, some analysts came out and said, well, you know what, it's not so bad actually, because maybe perhaps for the longer term, for higher oil prices, we just need the markets to balance out. Okay, we just need supply and demand to balance out. I don't buy this argument at all. I mean, they could balance out. I mean, oil prices could rise if there was less supply, and if they would have agreed on less supply, it would be better for oil prices. I see what's going on mostly as profit taking. And there's another reason I also mentioned yesterday for this sort of not total collapse in oil prices, not the $30 headlines. I was talking about 35, and as you can see, we dipped under 38 and didn't even go below this level. But another reason for the smoothing out is that in Kuwait, there is a strike in the oil production sector, and this is expected to lower the output from this small nation that produces a lot of oil. So that's another reason, but I also see it as profit taking. I mean, we saw oil prices already slide on Friday and lower expectations. As I said, the breakup of talks on Sunday was an even worse outcome than the low expectations. So we did have a collapse in oil. And now, as we speak, we're seeing oil prices coming back to the level seen on Friday, okay? On Friday towards the close, not the highs of $42, $42.50, but hugging the 40 level on WTI crude oil, sort of back to the basics, back to the basic disappointment, not more, not less, okay? Questions here. I'm good, thanks, Sinatra. Oil market is not really based on supply and demand. Saudis can pump more if needed or less as they wish, says Fabian. Exactly. We had a hint already on Saturday. Well, markets were closed anyway. But the same Mohammed bin Salman, he's 30 years old, by the way. He gave an interview to Bloomberg saying that they can lift production from 11.5 million barrels per day to 12.5 million quite easily. And if they want to, they can even raise it to 20 million. So I certainly agree that they can do even much more. What I see with this move is sort of finally they are reaping the fruits of what they did in November 2014 when they decided, the Saudis, against the will of other OPEC members, they decided to keep on pumping oil. They tried to crowd out the US shale industry. They had a hard time with it because production at the beginning during 2015 only went up, okay? And only recently it's been falling. So it's been taking them quite some time and quite a lot of internal pain. They had to raise taxes and things like that. And remember, they need to keep their population quite in line. So they paid quite a dear price for trying to lower production in the US. And now I think they're doing it with their bigger rivals. Iran and the other side of the Persian Gulf, and I think that's now what their power play is, at least what they're trying to do, and also perhaps trying to show who's the boss. But anyway, in terms of what's going on, currently we're at $40 a barrel. This is not too shabby. Another thing I mentioned is that with these kind of levels, also other members don't have enough motivation to cut production. These are not panic levels, okay? Another comment here, did anybody think they were actually going to agree on anything? Yes, I did think they were, and I wasn't the only one. That they would agree at least, I mean, not agree, but not do something really substantial, but at least, like the G20 released this kind of press release saying we will monitor prices. We agreed to freeze production at some abstract levels, the January 2016 levels, or I don't know, something. But they didn't even release any kind of declaration, nothing, no communicate, nothing. Okay, so that was surprising. Again, I was more worried. I was sort of talking about the fact that even if they do agree on something even meaningful, they wouldn't implement it because they don't trust each other. But not agreeing on anything, angry faces there. That's not what I had expected. That happened during the so-called Arab Spring when Libya and others went offline. Saudis compensated difference. Yeah, the Saudis are pumping oil. Also, the Russians are at record levels. The U.S. shale industry is now under 9 million barrels per day. It was already 9.6, but before the shale revolution, so-called shale revolution, they were at about 5 million. Anyway, the curious thing, if you wish, about the U.S. shale industry is that they can, if prices go up, they can ramp up production quite quickly. They're very flexible. Okay, so good morning, everybody. We talked about oil so far. What we're seeing oil around 40. Okay, back to the Friday levels. But what we're also seeing is that commodity currencies are making gains well below this. Why do you think all the gaps closed? Well, first of all, oil prices bounced back up. The Kuwait strike, but mostly profit-taking, sent oil prices back up. And it wasn't... So on the Canadian dollar, it's one of the most impressive closes of this gap. We had this gap right here. Didn't manage to break 130 on dollar CAD, fell back down. 129.30 was lost. An attempt to break back above this line failed. Then we lost 128.30, and now we're struggling with the lows of 127.50, which were the lows also last week. Oh, actually, we already reached 127.40, but this break is not confirmed. 126.60 and 125 are the levels below. Okay, but bigger moves. So Canadian dollar is playing catch up with oil, still looking better than oil prices. But bigger moves were seen in the antipodian currencies. Okay, so Aussie dollar made a break higher. I just released an article on Forex Crunch earlier this morning, saying that I don't see reasons for this rally. So, but I'll explain it soon. Anyway, we broke above 77.40. We have to zoom out to the daily chart because we're at 10-month highs, okay? Again, too many lines here, a bit of modernistic art. 78.40 is the next line of resistance, followed by 79, and of course the round number of 80. What's going on in the Australian dollar? We had the RBA meeting minutes earlier, late at night, in the middle of the night here. The Reserve Bank of Australia actually said that they're not happy with the strength of the Australian dollar. It complicates the rebalancing of the economy, pushes inflation lower, it justifies a loose monetary policy. Very, very subtle hints that they might cut again. They're not on the... No, a rate cut is not imminent, but they the rhetoric about the strength of the Australian dollar is now higher than it used to be. Okay, so they're not pleased with that. In addition, also in the world of iron ore, which Australia produces, there were some attempts to agree on some kind of alignment, if you wish, freeze in output. And these attempts also did not bear any kind of fruit. In addition, we have uncertainty in Australia. We have elections for both houses of parliament probably on July 2nd. It's not formal yet, but that's what it seems. So anyway, I don't see too many reasons for the Australian dollar to rise so much, but markets can be irrational longer than you can be solvent. So 78, 40, and 79 are the next levels to watch. Oil to react with the lag, maybe if your stockpiles keep building. Oil has been the leader so far, not the lagger, okay? Oil did affect other markets as stocks, commodity currencies, and also other currencies. We have stockpiles tomorrow. They keep on building up, that's true, but we have to also look at regarding oil inventories, not only crude oil, but also distillates and gasoline, okay? And with this release on every Wednesday at 2:30 GMT, we also get the level of production in the US. And it symbolically fell, I don't remember if it was last week or 2 weeks ago, under the 9 million barrel level, okay? It was a very small fall, but it's a gradual fall of production, okay? So I think that oil is the leader, not lagger, at least now. Anyway, we talked about the Australian dollar. Let's complete the tour of commodity currencies with the Kiwis. Also in the Kiwi, we had a break above resistance at 69.80, which was the level seen back just around the turn of the month, the end of March, early April, and now we're above 70. This is also a symbolic round psychological level. Where is the next line of resistance in Kiwi dollar? Not that close. So I would say maybe here at 71, 72. If we want to look a bit closer, maybe this line right here. We're just very, very close to this line, but I wouldn't call it a strong line, this 70-20 level. Okay, dollar Swiss. Well, now we're seeing it slide a bit as the US dollar is sliding across the board. So it's 96.30 at the moment. We already topped 96.40, which was a strong line of support here in mid-March, and then worked in the last few days also support. Resistance was at just under 97. Anyway, now with the weakening of the US dollar across the board, also against the euro and the yen, we'll reach them immediately. We're seeing the pair slide back down. Support is only at 95.50. Okay, so let's go to euro dollar here. Well, we had a first attempt, we had a recovery in euro dollar, more range trading than anything else. Euro dollar was not affected by oil. No weakened, well, we see here a very small weakened gap, which is basically well, we had it fall on Friday and then start a bit higher on Monday, and then basically erase this gap totally. We had a gradual climb right here. This morning we had an extension of this move. We had an attempt to break above 113.35, which was the low end of this range here, the very frustrating range at the beginning, the first half of April, before we had this fall. Now we're seeing it climb again. Again, the justification, we're seeing the US dollar slide across the board, defying what Rosengren said. But we have the Draghi show on Thursday, so I'm not sure. Well, the pair is, well, grinding back into range. Yeah, so let's see if this break above 113.35 works. Currently, it seems like a false break. The next levels are 114.10, 114.60 on the downside, 112.50, and 112.15. The ECB is not expected to change policy, but they are expected to do something similar or even more vocal when we talk about the RBA, to talk down the euro, to express concern and things like that. Okay, so they'll probably try to talk the euro down. They did introduce policy measures that were not able to push the euro down. Let's see if their words are stronger. Helicopter money, talking about that could help, but I don't think they're really able to do that. So that's where we are. Anyway, let's talk about the pound. Also here, we're seeing the pound rally alongside commodity currencies. Happy days. Yesterday, we had the Chancellor of the Exchequer, George Osborne, lay the case for the Remain campaign, or more correctly, project fear about what would happen to to UK households in case of a Brexit. Each household would lose something like £4,000 a year, and other scary measures. The numbers of course, have raised doubts from many in the British press because there are mere speculations. But anyway, so I haven't seen any new polls, but at least the Remain campaign is doing some efforts, and this is also supporting the pound. I mean, last week we had David Cameron implicated in the Panama Papers. The story is still with us, but at the moment, talking about why to stay, and especially, well, this is more reflection of the sell-off of the US dollar. Also, dollar yen yesterday, we had a gap to the downside on this risk-off sentiment. Also a result of the earthquakes in Japan on Thursday and Friday in the south of Japan. Many people were killed, quite tragic, and it resulted in some repatriations together with the fallen oil prices. But then also this gap was closed, sort of a more risk-on sentiment that led the pair back above 109. Now we're seeing it slide once again. What we're seeing in the last hour or so, I would call it just a US dollar sell-off. Sell the greenback now, ask questions later. Not really a risk on move anymore, like it was yesterday. Okay, so when we see also the euro gaining ground against, the yen also gaining ground against the dollar alongside commodity currencies, this is no longer a risk on move. It's a US dollar sell-off. Okay. Let's continue with see your comment. Oil rally is a farce, cannot last. Yeah, I also think it isn't justified. There's just too much supply, not enough demand. At current oil prices, we could see the US shale industry ramp up production at least just a bit to keep prices depressed. Okay. Anyway, let's continue. We talked about dollar Swiss. Euro Swiss, as usual, around 109. Extremely stable. Not going anywhere fast. Not much to add here, unless you have any questions about Euro Swiss. Euro Pound, okay, here we do see the move, especially yesterday, of this risk on sentiment favors the pound, less so the euro. We fell under 79.30, which was resistance back here at the end of February. So we fell below this line. Let's see if this breakdown continues. We would need, of course, we would need the euro to weaken to keep this sustained. I don't think we can. I find it hard to see the pound rallying a bit more. So if we have the pair falling, it's mostly on weakness of the euro. But well, let's see. 79.30 is now resistance. Support at 78. 77.40 is the old line. But let's add this line here, which was the low of the previous low here at 78.30 or so, and 80.20 works as higher resistance. A comment here: US oil just closed the gap at 40.50. This should be the place to start looking down. Yeah, perhaps. Let's jump for a second to oil. Well, it more than closed the gap. We've seen it. Okay. The gap, from the close on Friday. Yeah, 40.38, I think, was the close on Friday. Now we've closed the gap also on oil. Risk on sentiment. Most of the move came yesterday during the European and US sessions. So now we have the final push to close the gap. I think, we might get some altitude sickness right here. Anyway, the high level. No, we should move this line right here. Right here. 42.30. Okay. Anyway, let's continue the roundup of currencies. With the better mood in markets, especially yesterday, we had euro yen, which fell to the abyss, fell to 121.80. The lows is back up again, back to the previous range. Okay, so like with oil prices, euro yen and other were just or with dollar CAD, we're back to previous ranges. Okay, in some places we have breakouts, some places back to previous ranges. 123 is support, 124.20 is resistance, followed by 125, 122.50 is lower support. Pound yen here, of course, also we had the gap lower. We did not reach new lows. We did not reach 151.80, and from there we had a recovery above 154, closing the gap and now moving even higher, 156. One above, we had a move above 156.10, reached already 156.25, but still hesitating around these levels. Okay, so that's the coverage of all the currency pairs. Quite a few movements. Here we are with euro dollar still struggling with the 113.35 level. Stronger currencies are the Aussie dollar, edging closer to 78. Well, we already touched this line but couldn't break higher. But in terms of round numbers, the Kiwi dollar is surging 70.26 at the moment. This was also a high in the past. Anyway, these currencies are on a roll. All right, so let's see what else we had yesterday and we have today. So mood in general, risk on, and now even just a dollar sell-off, big bounce, especially for Aussie and CAD and also the Kiwi. Kuwait strike in production also helps. I don't know how meaningful that is, but that just adds to the mix. Just to recap what Rosengren said, he's a dove from the Boston Fed. He said that investors are too pessimistic, that wages are picking up, and that interest rates will be rising faster. Does this imply a more hawkish FOMC next week, April 27th, in the next meeting? Will they hint about a rate hike in June? Well, if we look at expectations here, for June, according to bond markets, it's still something like 14% to be generous for a rate hike in June. The markets were bidden twice or three times by people like Rosengren and Owen Dove, Evans and Owen Dove, others that are sort of more in the middle. But the markets listens much more to Dudley of the New York Fed, which is very dovish. He spoke yesterday and did not change his tone. And of course, Fed Chair Janet Yellen, number one at the Fed, the chair, and she was very dovish. So even if some doves have been converted to the hawkish side, Yellen and Dudley are still drawn by the dark side and seeing the glass half empty and not in any rush to raise rates. Okay. Another thing that was a bit ignored by markets, I've seen that the Chinese growth quarter over quarter was actually worse than expected, 1.1%. This implies a weaker growth rate a weaker annualized growth rate than 6.7 reported, and they delayed this publication. It's of course adds to the general suspicion about Chinese growth figures. So just something to note. We had a few figures yesterday. Well, we had Dudley, I mentioned him. We had Canadian foreign securities purchases beat expectations, more inflows into Canada, perhaps also supporting the Canadian dollar, but not a first-tier figure. We had the NAHB housing market index in the United States miss expectations by just a bit. And as I mentioned, the RBA complaining a bit about the Australian dollar more than last time. No rate hike is on the cards soon, but I believe that if we'll have a big rise in the Aussie, they'll give us hints. They'll begin threatening with a rate cut. Okay. What do we have today on the agenda? We have the Eurozone current account for a warm-up. And then we have a more important figure, the... okay. So yeah, let's zoom in a bit, so it'll be easier for you to see. The current account in Europe, well, it's positive. It's a surplus thanks to the, thanks to German exports to China more than anything else, but also other things. It's expected to remain positive. The big event for this morning in Europe, for the euro, even though the euro moves more on other things, sentiment, still worth noting, still an important figure. The ZOO economic sentiment, it's expected to rise from 4.3 to 8 points, showing more optimism in Germany. But I personally will not be surprised if we have some kind of disappointment. because there's still lots of uncertainty. So I would more favor sort of the same level of cautious optimism, not more optimism. Also worth noting is the current situation. Okay, economic sentiment is forward-looking. Current situation looks at the present. Also have construction output and the Eurozone economic sentiment. These are second-tier figures. Then in the US, we have housing figures. So housing starts are expected to slide by just a bit from 1.178 to 1.17 million. Building permits to rise from to a round number of 1.2. In too many cases in recent months, we had one figure beating expectations and the other missing. So, and this, of course, means a more neutral move. So these figures have become a bit less important than they used to be. All right. And then we have a series of speakers, mostly commodity currencies. So the focus remains on commodity currencies. We have the governor of the RBA. He'll be ending his tenure soon. But anyway, Glenn Stevens will talk at 1:30 GMT, not a typical hour. I think he's speaking outside of Australia. At 2:30, 2:35, we'll have the Bank of England's Mark Carney, the Canadian, speaking up. Also, his comments about Brexit, contingency plans for Brexit. Some in Britain expect the UK to cut rates in case of a Brexit to support the economy. Some expect them to even hike rates to prevent an outflow like we had in Russia, for example. I don't think rate hike is on the cards, but just an anecdote. Anyway, at 3 GMT, we have another Canadian, which is currently the governor of the Bank of Canada, Stephen Poloz, talking. He was relatively optimistic last week in the rate decision. And last but not least, the Kiwi milk prices, GDT, the global dairy trade, which is sometime in the European afternoon. Last time we had it bounce back up. Let's see what happens this time. Okay. So yeah, these are the events for today. I see comments here. Dollar index also key support here, right at the bottom of the weekly channel. I don't have, unfortunately, the dollar index here, but if you could share a chart, that will be nice. Anyway, the dollar is certainly on the back foot, on the ropes. Yeah, oh, okay. DXY chart. Oh, I'm not sharing it with you. Sorry. Yeah. So here we are with the dollar index. Okay, thanks for sharing the chart. Oh, that's a nice channel. Let me share it with everybody on the screen. So we have an uptrend channel here. We had it, well, mostly on the top side. I would say that the uptrend, well, the resistance line is stronger than support, because the support is formed a bit more loosely. But anyway, we are certainly seeing, but the support line, not the trend line, is much stronger. Anyway, looks like a nice chart, and looks like we're heading down on the US dollar index. As I said, sell the dollar now, ask questions later. Okay, that seems to be the mood in markets. Let me add a few lines also on my chart here to share with you. So the lows, well, we can put them here at 93.60. Yeah, high volume trading here. This used to be a strong line, 94.50. 95 is always a nice round level and also worked as resistance a few times. I would say it's stronger support. And yeah, I guess also here. 96.40. All right, anyway, we are seeing the US dollar struggle at the moment, reversing previous gains. Support line only have one point of contact. Second point of contact isn't confirmed. Yeah, Yeah, but let's see how things develop. We can certainly have a confirmation of that. Has the German zoo have a bigger impact than the Euro zoo? You think? I only saw you mentioning. Yes, because it's a German institute. The Centrum. Forgot the initials, but anyway, yeah. Usually the German figures are quoted. Sometimes the current situation has more impact. Sometimes the economic sentiment has more impact, but the all your Eurozone survey has less of an impact, okay? Anyway, IFO is considered Germany's #1 think tank, but they released their figures a few days, they release it next week, so zoo still has an impact. These are figures for April. It's a survey held in April, so it's fresh figures, forward-looking, not hard data, but still, of course, of high importance. Is there no following candles showing a bounce as support? Yeah, agree. Okay. So I think we mentioned all the events for today. Euro-dollar is still struggling with this level. Yeah. Any more questions? Another thing perhaps to watch, I didn't put it on the chart. If we talked so much about oil, tonight at 10 local time here in Europe, or at 8:30 GMT, we have the API weekly crude oil stock. It's sort of a preliminary release from another institution, sort of a hint for the crude oil inventories, which still have more of an impact. Anyway, last time we had a big buildup in crude of 6.2, but as I mentioned, not only crude is important, but also the distillates and gasoline, and tomorrow's figure is a bit more important. Okay, let's see if I can pick up. So I see here a few analysts again talking about the Kuwait strike as one of the reasons, or perhaps the main reason for the bounce in oil. I see it more as profit taking and as the main driver, and the Kuwait strike as adding into the mix. To Brexit or not to Brexit, that is the question. Officially, the campaign about the Brexit began yesterday with the speech of Chancellor of the Exchequer George Osborne. And morning, JM. Morning, everybody. So that's officially when the campaign, of course, the campaign began a long time ago. The campaign began when David Cameron returned from Brussels with a deal I think that is recognized now by everybody as a fudge, nothing really of substance. The big question is not if this deal is a good deal or not. The question is, what would be the situation in case of a Brexit, as you say, Jax, to be or not to be? How bad? What will be the implication of a Brexit? We know that, it's clear that we know the current situation, trade relations, immigration. We know the current situation. That's the devil we know. It's far from perfect or even not so good. The situation in the European Union and Britain's place. Of course, some things are better, some things are worse. Free movement, I think, is a general positive. I see so many Brits living here in Barcelona and in Spain in general, and many. Anyway, I'm not going to enter into this whole debate. What I'm trying to say is that this is the devil we know, and there is an argument about how things will shape up if the UK leaves the EU. Of course, there will be some kind of a change, but with the level of uncertainty, the government is trying to say this uncertainty is bad for the UK. This economic situation will deteriorate, and proponents of a Brexit say no, we're currently in a bad situation, and after a short period of uncertainty, things will actually improve, and we can have govern in a better manner. we did hear worries about Brexit also from the IMF, also from officials outside the Eurozone, the EU, the UK, as a global risk. I think also this is a bit exaggerated. The referendum is held on June 23rd. I'll echo here another opinion I heard, that even if the UK decides to leave the EU, it'll be like many other referendums in the European Union. Eventually, there will be some kind of an agreement, sort of a new trade deal or something like that, not too different from the current arrangement. Basically, like with the Lisbon Treaty, European Constitution, eventually there will be no real change. It'll be just allowing the masses to vent their dissatisfaction. I don't think it's true. I think that it is a binding referendum and it'll have immediate implications. It already has implications because of the uncertainty. Already people are, well, I mentioned this anecdote about people seeking an Irish passport, those with Irish blood, or maybe perhaps some investments are deferred until after the referendum. So I do think that even, of course, the UK will reach new agreements, with trade agreements with everybody, and trade will continue all the time. Of course, Brits are not going to skip their Rioja Spanish wine, the German cars, and the same thing goes the other way around. I mean, people in the old continent are will continue buying UK products anyway, but there will be some changes, of course. Okay, that was a long banter on Brexit. Any more questions? Let's look again at the charts before we begin the wrap up for today. Euro dollar not really making a big move. Dollar CAD, a good candidate for a bounce if the dollar would reverse from here. Yeah, let's look at the chart you shared with us. Ooh, that's the daily chart. Anyway, yeah, we had a weekend gap in dollar CAD. And now a big move to the down. That's all. Yeah, so yeah, well, the next big thing for the Canadian dollar is the speech by Stephen Pelosi. Let's see how he impacts the pair. Anyway, I like the Canadian dollar. I think there are very nice moves there, worth watching. Already read the next question. Anyway, yeah, it's an interesting chart. Technical levels in dollar CAD are sort of respected. Yeah, now we're seeing it bounce. Anyway, we had a move to 130. We didn't break above. We fell down. Currently struggling with the levels last seen. If we fall below these levels, we are back to levels last seen in the summer, July 2015. We have further support around here. Yeah, 126, perhaps even here. Yeah. Okay. IMF G20 meetings, anything drastic from them? No, nothing. We had the IMF forecast. They were quite gloomy last week, and that came before the weekend meetings. I didn't hear anything of substance. If you know something, please let me know, but I haven't heard anything we didn't know. IMF is very worried about global growth. They did upgrade the forecast for China. Apart from that, they downgraded the forecast and told governments to do more, echoing the ECB. Right shoulder at 134, then down to 120 weekly view. And dollar CAD, let's take a look at that. Yeah, of course, we had the very dramatic rise in dollar CAD when oil prices were falling, and the Bank of Canada was sort of on the verge of making another rate cut. They didn't cut, and that's the top at nearly 147. 134, yeah, 134 is certainly Yeah, 134.60, a line I mentioned here several times as the high here. And yeah, I see what you're talking about. Bouncing now at the 3 drive M30. Okay, let's share that with everybody as well. Yeah, so another slide here on the slippery slope. $4 CAD. Yeah, capped by this line and sliding along this one. Yeah, the Canadian economy isn't doing that bad. Of course, one of the things that help the Canadian economy is the weakness in the Canadian dollar, which is gone by now. So, and the Bank of Canada is a bit worried about that. So, let's see how things move on. Okay, thanks for the charts, Luca and JM. Much appreciated. Let's move to the wrap up for today. This is the wrap up for the live market open for Tuesday, April 19th. Positive mood in markets, risk on, and which also evolved into a big dollar sell-off. So it's a big turnaround from yesterday. We had a fallout from oil. We had a collapse in oil prices or fall after the Doha disappointment, the Doha debacle. The members of OPEC and non-OPEC countries did not manage to reach even any kind of general agreement. But after the big fall, we had a profit taking, a strike in Kuwait that limits production, and a turnaround in oil prices. Oil has closed the gap, and commodity currencies are even surging higher, especially AUD and Kiwi. We'll look at that soon. Markets ignore what Rosengren, the Dove, said. The president of the Boston Fed said investors are too pessimistic, that wages are picking up, that rates will be rising faster than markets think. Does he imply a more hawkish Fed decision next week, maybe hinting about a hike in June? It doesn't seem so. Markets are not buying it whatsoever. They listen to the more important people at the Fed, which are Dudley, number 3 at the Fed, and Yellen, number 1. Fisher is yet to talk. Anyway, yesterday we also had, the RBA complained a bit about the Australian dollar. Let's look at the charts during this wrap. Starting with euro dollar. Euro dollar is now making an attempt, so far not really succeeding in breaking back to the previous range of 113.35 to 114.60. So this line, watch this space, 113.35. Support is at 112.50. Relatively still frustrating moves in euro yen. Much bigger moves in euro dollar. In pound dollar, we're seeing bigger moves. Quite a big recovery, hopes for the success of the Remain campaign, and mostly a US dollar sell-off. Next resistance line is 143.65, support at 142.80, and 141.25 is lower support. Dollar yen, now hugging the 109 levels, the pair recovered on the risk on sentiment. The yen weakened. Earlier we've seen just the US dollar sell-off, now it's not so much that way. Anyway, 110 resistance, 107.65 support. Dollar CAD struggling with the lows. The recovery in oil prices. Canadian dollar is recovering more than oil prices, I would say, but not breaking to new ground. 127.50. I would watch 127.50. Above this line, 128.30 and 129.30. 125 is the big level below. The Aussie dollar is reaching new ground. It touched for a few seconds above the 78 level, just below this level at the moment. 78.40 is resistance, followed by 79 and 80. And the Kiwi dollar made a break above 70, now is struggling with resistance. It is trading at weak resistance that was support in the past. Anyway, here we are. Events that we have for today, and that will also answer the question about the pairs to watch. So the event for today, European morning is a bit busy with the current account and more importantly the German zoo figure. Expectations are for better economic sentiment. I have a bit of doubts about that. At 12:30, we have the building permits and housing starts in the US. Usually they tend to offset each other. And then it's back to commodity currencies. These are the pairs to watch for me. So we have a speech by Glenn Stevens of the RBA, Stephen Pelosi of the Bank of Canada, and we have milk prices in New Zealand. We also have in the middle a speech by Mark Carney, a Canadian, but of course from the Bank of England. So I would say we have a little bit of everything today, but I would still focus a bit more on oil prices, on the Canadian dollar, because we have a mix of the speech by Pelosi. There's still a focus on oil prices, and the Canadian dollar has yet to break to lower ground. So I think it's a break or bounce moment for the Canadian dollar, and this is the most interesting pair to watch. Second in line, I would say the Australian dollar, because we had the RBA meeting minutes and now a speech by Stevens, all right, and yeah, also the Kiwi, well, third one I would say. So it's mostly commodity currencies. Most interesting one for me today is the Canadian dollar. All right, so I guess that's it. We covered events for today, events from yesterday, mood in markets and charts also in this wrap-up. So thank you very much, everybody, for coming. Wish everybody a safe and successful day in markets. We'll be here tomorrow. We hardly talked today about the ECB on Thursday. We'll talk a bit more about that tomorrow, and of course, much more on Thursday and on Friday, the before and after. And that's it. So thank you, everybody, and see you tomorrow. Bye-bye.